Thank you, Marnie. I'm here primarily in my role as the chairman of the Buffalo Angels. The Buffalo Angels, as those of you who are angels and attended the Angel Breakfast know, we're all about trying to regionalize our syndication network. We've gone north to the Niagara Venture Forum, which is an angel group in St. Catharines, and the Golden Horseshoe Angel Group in Hamilton. We've gone south to Pittsburgh and went down and visited with the Pittsburgh Blue Tree Angels, and we went west to Erie, Pennsylvania, where part of the Blue Tree Network has extended and opened up a new angel group there. And we go east as far as Rochester and Syracuse to network with those angel groups. And we have all of those people here today in the room. And one of the things that we have found is there's a disconnect. There is, when people hear that we're thinking of investing in Canada, or that we're inviting Canadian investors to come to the United States to invest, that people say, how can you do that? There are regulatory barriers. There's a river that nobody can swim across. There's no such thing as the internet in Canada, and I'm here to assure you there is. So what we want to do is we want to provide you with real-life experiences of real-life international angel investors and what their experiences have been and what are the real barriers, so that you can hear what are the barriers for yourself and make your own decisions on whether you want to participate in international angel investing. So we have an outstanding panel today, and I'd like them to introduce themselves and tell them how they are involved in international angel investing, and then I'll ask them a series of questions and maybe we can draw out some of the issues. At the end of the panel questions that I get to ask, each of you can ask questions to the panel if you choose. So can we start with you, Sanjay?
Sure. Let's see here. So, well, I guess you can read this. My name's Sanjay Singhal. I was CEO of a company, am of a company, Simply Audiobooks, that was started in 2003, and we had 4 U.S. investors in that company. Our primary market was the U.S., and we had a fun experience with our investor and our board, our investors and our board, one of whom was Don Hess from Amherst Tech Ventures. And yeah, I look forward to telling some of that story.
Great.
Good afternoon. I am a U.S. corporate and finance lawyer with the Buffalo firm Gross Schumann. We have an office in the Toronto area, and I go there weekly to practice U.S. law for Canadians, and that's something I've been doing for upwards of 20 years now.
Henry Kay, and I'm an angel investor. I've been in international marketing all my career and made my first Canadian angel investment, I guess, in 1999. I was the last person standing in the company and took it bankrupt. So I learned a little bit about Canadian law, that it was, you could do it and not get sued personally in the US. But since then, I do some work in Alberta, and I've now invested, and I'm on the board of 2 companies based in Toronto, and one you're going to hear about from Lisa.
Yep. So I'm Lisa Crossley. I'm the CEO of Quantum Dental Technologies, and I'm in the process now of closing our second round of financing, which will include a number of Canadian, both individual and angel groups, as well as quite a number of US-based angel groups, primarily from the Boston area, but also from as far afield as Georgia. Prior to running this company, I was the CEO of a company in Burlington, Ontario, just outside of Toronto, called Natrix Separations. And with that company, I raised venture capital financing as opposed to angel financing, but again, it was a cross-border transaction. Our lead investor was out of California, and we had 2 institutional investors in the Toronto area as well.
Okay, it sounds like we have a panel that have survived the hazards of international angel investing. So I'm going to start by asking Henry if you could comment on what made you become an international angel investor.
It started, as I said, back in the late, I guess, 90s, early 2000. I was invited, part of an angel group in California called the Keiretsu Forum, which had a chapter in Calgary. I was there for a meeting to talk about life science investing which I found out from the angels in Calgary is far too risky. They were very comfortable when I asked the question, so you drill a hole in the ground and oil comes up. If it doesn't, you drill another one. That's not risk. But so through that, one of the people there asked me would I be interested in investing in an ophthalmology company, and I had worked for Allergan for years before that. So I said, this is technology that's good. We invested in it, and it just never made it technology-wise. But from there, I met the Mars Center in Toronto, and they did a speed dating where I came up because of the infrastructure in Toronto for angel investing. Entrepreneurs was not great. And they said, would I mind sitting in a conference room for a day and have companies come in like we're doing here, an hour at a time. And I met Steve Abrams, who was the founder of Quantum Dental. And it intrigued me because my first reaction to him was, no one's going to buy this. It's just not in the economics of a dentist. And as we talked, he called about a week later and said, so would you be an advisor? And an advisor became an investor, and then through there, a second investment company that I've invested in. So,
And Henry, that's a great story for the entrepreneurs in the room, because I think they all gave a presentation in front of a large audience today and had the awful feeling that it was to deaf ears. But occasionally it's to people that are really listening and can really help, right?
Exactly. It has to attract some attention, where even if it's silly, and I think we heard it at lunch, you're going to hear the 10 reasons not to invest, why it won't work. But usually there's somebody in the angel community sitting there that says, wait a minute, I think there's something here, and I want to learn more. And it's then being receptive to learning more.
Okay, Sanjay, I want to go back to, you mentioned Don Hess. Don Hess, who's now departed, and tragically, unfortunately, and I took a ride up to Toronto together to go to the angel meeting in Toronto, and I asked him how his investments were going that he had, and he pulled out a audio tape and said, I like this audiobooks company. And I said, is it going to make money? And he says, well, you never know that. So maybe, Sanjay, could you make a comment on, is Don Hess's estate still a investor in your company, or have they been cashed out? Is there an exit here?
Yeah, no, they cashed out, I guess in 2007. And they had invoked a clause in their pref share agreement that allowed them to, the company had started running into some bickering among the founders. I was certainly one of them. And they were able to call back their investment with an 8% return over the 5-year period, or annually compounded over 5 years. So they did, all things considered, quite well over that time period.
Were those preferred shares with a 8% cumulative dividend?
That's right.
Okay, so maybe I could turn it over to Tom. From a legal point of view, we've got some tax issues here. I hear that somebody made money in Canada, and now it's got to come back to the United States. What are the legal barriers to reclaiming your gains that were made in another country?
Well, whenever you cross the border, you're adding another layer of legal and tax complexity. And one of your first tasks, if you haven't already done it, is to talk to your tax advisor and sort out what are the tax consequences going to be, and how is the activity going to be reported. In the situation of investment in shares, the income is likely either dividends or your compensation for when you exit and sell the shares. Nearly all the states, or all the countries, Canada and the U.S. have withholding, and Canada's withholding requirements apply to those streams of income, dividend and payments for shares. So your starting point is that you are going to be subject to withholding. The tax treaty takes down the percentage amount that is to be withheld, but again, if you meet and sort things out with your tax advisor, you'll often find that it's really just a timing effect, and on the filing of a return reporting the activity, in essence, you'll get the withheld taxes back. So really what you're looking at is a timing difference plus, the cost of the extra returns and reports.
Okay, so that's really no different than making money in the United States when you don't have a backup withholding exemption, because they're going to take the money out when you make the money. If you don't have a backup withholding, some of the money is going to come out, and then you have to file your return and get your refund if it's appropriate, right?
Pretty much.
It's pretty much the same thing. So Lisa, I'm hearing it's hard, at least it's a second step to get the money out of Canada, all your money back. Is it as hard to put the money into Canada as it is to get it out?
No, I mean, not at all. It's very easy. As Henry will tell you, you just wire the money up to our bank account. I'll give you the details in a moment.
Do you want to give us your wire transfer number?
Absolutely. That's exactly.
Don't put it in an envelope and cross the border.
No, exactly.
Okay, but the real bottom line here is it's easy in and easy out at the end of the day, right?
Yep.
Pretty much.
I mean, literally, my investments in Canada have been call Charles Schwab and say, wire Canadian dollars, and off it goes.
Okay. Now, Henry, I'm going to ask you, because you just finished up with that. What is the difference for a U.S. investor when investing in a deal from Canada compared to your many deals here in the United States?
Well, outside of dealing with a foreign country, and you started it with, it's so far away, they really speak a different language, and for Americans growing up in New York, they're very nice. So it's you never really know, whether you're hearing the real issue because they're being polite about it. So you have to work a little harder. But in reality, there's no difference. What I found is the technology is there. The management is there if you look for it, like you would look for a deal anywhere. So I really don't see any difference. And the interesting question, one of the angel groups that I'm a member of said, we can only invest within a driving distance and only 100 miles or 200 miles of where our office or headquarters are. And I asked the question, so how many of you have visited a company that you've invested in once the due diligence was done and you sent the check? 0. So the likelihood of them going to Canada to see their company and follow up is 0. And they went, oh, okay, I guess we can do this. There's really no difference.
So Sanjay, when I hear that, I hear that the Americans think the Canadians are very polite and nice. You have the other side of it. Now you have to deal with these big bad Americans and their huge egos. How do you deal with that?
Yeah, I mean, I can say firsthand, Americans are not nice.
Wait, I'm going to withdraw the question. Strike the record. Strike the record.
Yeah, so we had a little bit of, I guess, a different situation where our angel investors who invested in us were either board members or advisors to the, or had, I don't know, visitation privileges. We had. So at every board meeting, so once or 3 times a year or so, we would have 3 or 4 of our U.S. investors, or frankly all of them, in the room. And they would argue among themselves, they would tell us what to do. But at the end of the day, the interesting thing about it was they were all in it for the discussion, and a different style of discussion than we would have had ourselves. But at the end of the day, it was, you guys do what you want to do. We just want to kind of see what you're doing.
Did you provide the bandages and liniment?
No, we do have a free health care in Canada, though, so it wasn't a big problem.
Lisa, following up on your experience as a Canadian entrepreneur looking for funding, does that match your experience?
Well, I mean, in terms of looking for funding, without stealing your thunder and going on to the next question, I've looked on both sides of the border, and there's a very big difference in fundraising, whether you're looking at Canada or looking in the States. In my experience, if you have a good fundable value proposition and a business plan that clearly articulates that to investors, then you can very easily raise money in the States. It's more challenging in Canada. You can raise money in Canada for earlier stage ventures with perhaps a less polished package for investors, but it's very difficult to raise at the later stages. Canadians are inherently very risk averse, and we are used to, as a nation, our ideal goal is very socialist. Everybody should come out equal, and we're not used to this philosophy of I'm trying to build something really big that's going to differentiate itself from everything else in Canada and be a wild success. So I find, and I am biased because I did start my career in Boston and worked for a Boston-based company for the first several years of my career, but I find Americans are hungrier. The investors tend to want to put in more money if it will allow the company to grow faster, and that's culturally very different from what you see in Canada. So It's a very different approach, but I find it very easy to raise money in the States, and it's a little bit harder to actually close a deal in Canada.
Okay, that's great. Thanks, Lisa. Tom, you talked a little earlier, there's a few tax things when there's income made. What about the other things? You know, we fill out currency forms if we want to transfer $10,000 over to Canada and things like that. Are there any of those rules that apply to investable dollars? Can you comment on that?
Well, I'm a U.S. lawyer. My understanding, though, that there is a notice that is required of U.S. investment in Canada, but that's strictly a notice filing. So I think there's not all that much to that.
Okay.
I think I'm going to write that down. I don't think I filed any notice.
Okay, and then any other barriers? Immigration, homeland security?
Well, I mean, those are things that need to be taken into account and planned for. If you are, contrary to Henry's experience, planning to go to the plant monthly and see what's going on and check the morale and kick the tires and that sort of thing, you're going to need a category to get across the border. In all likelihood, I think you'd, and I'm not an immigration lawyer, but I expect you'd qualify under the B category, and it's routinely and pretty conveniently and easily done.
A B category, now, is that the one where I say I'm a consultant and they put me in jail?
No, I've never
B
said
is
that.
the business visitor.
Business visitor, okay, great.
B1, B2 is when you're going to vacation.
Okay, great.
I'll just say that, by and large, most Canadian companies have legal counsel who's very experienced at doing cross-border transactions. It is very, very common for Canadian companies to raise money in the States, and most of our venture capital companies invest in the States as well as in Canada. So by and large, our legal counsels can provide advice on issues like this. And our counsels will take responsibility for providing the appropriate notice to whichever regulatory bodies might be concerned with a U.S. investor investing in Canada. So that generally wouldn't be a burden that would fall on the investors. It would fall on the company.
Yeah, that's a really good point. This is a familiar and well-trod path. You're not blazing any new territories. There's lots of people that have gone before you, and there are armies of accountants and lawyers who have done this sort of thing, and they're available to help with this. And again, it's nothing new, unique, or novel. I mean, each situation has its own unique aspects, but the answers tend to not be unique and not expensive or difficult or complicated.
Okay, I'm going to go off topic a little bit from the international, and I'm just going to say that I'm hearing from Sanjay and Henry, they mention exits, and I had never heard that word before. So I'm wondering if you could tell us angels in Buffalo what an exit is. I'll call in Henry.
Yeah. It's when all of your shares disappear and someone gives you a lot of money for them.
And can you report out on any successful examples of that?
One, but it's a U.S. opportunity with a diabetes company that I invested in 2004, a young man's PhD thesis in an insulin that's only released based on blood glucose levels, so you can't overdose. And we raised $9 million from 4 rounds of angels, no VCs, $12 million in grants, and we just sold it to Merck for milestone payments of $500 million with some sales-based milestones after that and a triple-digit upfront number. So there are a lot of happy investors.
Well, we all need to hear that.
Yeah.
Now I know what the word exit means. So I'm going to throw toss-up questions out there. Anybody can take the question. Is it easier for companies to raise capital in the U.S. or Canada?
Well, I mean, I think Lisa addressed some of this already. It's far easier to raise money in the U.S. One of the most frustrating things as a Canadian entrepreneur trying to raise money in Canada is that niceness factor, is because they'll smile and nod at you and say, yeah, this looks nice, and then at some point further down the road they'll say, we don't actually have any money, or they'll ask for a business plan, which is code speak for move on and for the next person.
The get lost kid is the other interpretation of hand me a business plan?
Yeah, something like that.
I'm going to ask the question, is there any investment or regulatory difference between the two companies?
Let me take that one. Generally speaking, Canada has no federal laws of general application regulating securities transactions. Rather, each province has its own securities legislation and its own provincial securities commission. That being said, though, they are and act very, very similar to what we see and experience here in the States. Their goals and missions are, the same as we have. In other words, protect investors, the integrity of markets, level playing fields, all those good things. And the concepts and the requirements tend to be very much the same in terms of registration, prospectus, exemptions, disclosure, and even if you take a look at the specifics of their accredited investor requirements, they're nearly identical to what we have in the States.
Okay. How about the deal structure or term sheets? Do they differ much?
I think the answer to that is yes, and Lisa and I are learning that as we're putting together a term sheet for Quantum Dental. Preferred shares are very common, with interest payments, as Sanjay was talking about. Very common. It's almost required in early stage A, B, C rounds in the U.S. Also, the option pool that's reserved for management is usually about 15%, and I think in Canada it's significantly less than that. So those are probably the two main ones that we've seen. Everything else pretty much is standard. It's almost a term sheet that's a format. Yeah. Every angel group takes out the term sheet of a deal they've done and said, make it look like this.
Now, Henry, I heard both Sanjay and Lisa say that it's so much easier to raise money here in the United States. So I'm expecting that each of the individual angels who invest in Canada give the companies $1 million each. Has that been your experience, or do you give an amount?
We usually give two. No.
Yeah. I want to just say you're from Boston, you're an international investor, people are seeking you to come and invest in their companies from great distances. What kind of money would an individual investor in your angel group make into Lisa's company in the Toronto area?
Well, I think they would do it regardless of whether it was Toronto or in the U.S. I think on average it's about $25,000 is kind of the typical angel investment. Some companies will take a little less, but it's 25 to 50. It's rare that I've seen on a first round someone comes in and says, here's $200,000. It's a little more cautious. Yeah. And then in subsequent rounds there have been people who put in.
So you make that up by diversification?
Yes.
Okay,
it's really building a portfolio.
So instead of $200,000 on one number at the roulette table, you actually bet 8 $25,000 bets?
But there's going to be more rounds coming.
More rounds coming too.
You want to be available to invest in subsequent rounds, at least to keep your pro rata share.
I see, to hold your position.
Right.
Okay. I'm going to ask another question to the panel. Where can you expect quicker exits? And how do you get your money back in the two countries? Anybody want to handle that?
Well, I will say that Canada is known for earlier exits, and so in some respects, CEOs in Canada exit early and often, more so than in the States. The challenge there is that the model for success, the angel groups have traditionally played at very early stages in companies, at the seed stage. But where you really see value capture is not at that seed stage. The seed stage is really about value creation. So as Henry was saying, unless you leave yourself some dry powder to continue to play at the next round, you run the risk of having invested in that early stage and not getting a good return. So, in Canada, we tend to see fairly early exits. Those would be relatively low value in general. So you're going to get some return, but not a great return. In the U.S., investors tend to hang in there a little bit longer, try to grow the company to a significant level, and get a really compelling exit, like Henry just experienced at Smart Cells. But in order to take advantage of that as an angel, I would strongly advise all of you to examine the paradigm shift that has occurred in angel investing, where a lot of the venture capital companies who were typically playing in the sub $8 million investment range have disappeared or have closed their seed stage, even their beyond seed stage, sort of early A stage groups, and are now investing really only at the late A to B and beyond. So there's a gap there between friends and family and what's now conventional VC, and that funding gap is being addressed by angels, but it's still a matter of education for companies to go out and convince the angels that they're willing to play with companies that have pre-money valuations of, say $6 million, when angels typically play at the, $1 to $3 million pre-money value. But particularly with life science investments, and I know you saw a lot of life science potential portfolio companies over the last hour and a half. Life sciences companies take a certain amount of capital to grow and to get to a compelling exit. And if you are pigeonholing yourself into just investing in those seed stage companies, then you're denying yourself the possibility of having a really compelling exit like Henry had at Smart Cells by playing at that later stage. So I think, some of the most successful angel groups, and I've encountered a number of them in Boston, have changed their paradigm. So they no longer just invest in companies with really low pre-money valuations. They now play at that intermediate stage, and they're the ones who are really seeing the value capture, not so much the seed stage investors anymore. And in fact, seed stage is the highest risk phase of a company's lifetime to invest. If you can wait until the company is a little more mature and has a higher valuation, the company's been de-risked so significantly, you have a much better shot of getting your money back if you do appropriate due diligence. And at that stage, you can really get a very compelling exit. So, my challenge to you is to really reconsider what you think of as angel investing and try to look at it in terms of, the statistics bearing out that the place to play is a little bit later on in a company's evolution.
Okay, Lisa, I only have one question to ask you. Is there room in round 2 for you?
Yes.
In your round 2?
Yes, there is room in our round 2. We're doing a 2-stage close.
And you'd accept angel investors right now?
Absolutely.
And American investors are okay?
Most of our investors in this round, we have a number of high net worth individuals in Canada and hopefully Nick's group out of Niagara, but most of our investors are out of the Boston area right now and Savannah, Georgia.
And you would have given us
the check you told me you'd have today?
I asked him for cash.
Oh, okay. I trust him. Right.
He couldn't get across the border with the cash. He left it at the border.
Right.
Okay, I'm going to say, let's just put this to the panel right now. You've heard me ask a series of questions, so it's just a yes or no. Would you recommend cross-border investing? Sanjay?
I'm not going to give you a yes or no answer because I had a very significant experience with all the cross-border investments we've seen that you guys can kind of evaluate for yourselves, which is every cross-border investment I've seen involved somebody from the States having a direct connection to something in Canada that made them willing to invest in Canada. Either they had a very close friend who also invested, who was an angel in Canada who invested, they knew the entrepreneur in Canada, or they had experience with that industry in Canada. I've never seen, and you guys may have a different experience, somebody just blindly coming in and hearing a business plan and saying, whoa, Canada, sure, why not invest in Canada, right?
Mm-hmm. So qualified, you'd recommend it?
Yeah, highly recommend it.
Okay. Tom, anything you'd like to add to that?
Well, I would answer by saying that the fact that it's a cross-border investment, from what I've seen, tends on the scheme or the whole of things not to be that big of a factor. It's not a deal breaker or deal maker.
So that's not the investing paradigm decision that you have to make. It's all the other factors that we heard about today from other speakers.
It's a complicating factor around the edges.
Right. Henry?
I would add just one thing to what Sanjay said. From the Boston groups, the question that was asked is, so is somebody we know going to be visiting the company? So it's not everybody, but it's, so in this case, so I will join the board of Quantum. Oh, well, if you're there, then it's okay. So there's a lot of trust in an individual.
And I know Lisa doesn't want me to ask this question because she has a conflict of interest in answering it. Okay, I'm going to move on to the next question, but I will ask you a question, Lisa. Would you recommend cross-border fundraising?
Sure, absolutely. And I mean, one of the things that I think you get as a Canadian company out of bringing on U.S.-based investors, like accessing Henry's expertise, but even Henry aside, is you tend, there are far more angel networks. Now, Nick is doing a really nice job of bringing together some very impressive angel investors in the Niagara region, but it's more difficult to get those angel networks together to get critical mass in Canada. It's just not a model that's really gelled quite yet for us up there. So in the States, if you can bring on a US-based angel network and ask that the largest, say, 2 angel network investors or nominate a representative onto your board, you get access to tremendous operational expertise and experience from investors, many of whom have been former entrepreneurs themselves. You get access to their networks, as well as their operational expertise, as well as the ability to syndicate the investment by getting introductions from them to other angel networks across the country. So there's a tremendous advantage to being willing to syndicate the investment beyond the Canadian borders.
Thank you. I've asked you all the questions that I wanted to know the answers to, and now I want to open it up to the audience to see if there's any questions in the audience that could amplify some of these issues. And we have someone with a microphone.
Actually, can I ask a question of you guys? Is there any difference in valuation that you've seen across border? Because my expectation is Americans give higher valuations and Canadians expect lower ones, which should be of some specific interest to the...
That's very helpful information, Sanjay.
I mean, the Americans, you can typically get higher valuations in the States, although they will discount typically a Canadian company just for being Canadian. And that's true whether you're getting angel investors or venture capital investors. They will apply a discount because you're in Canada. And you have to kind of, argue your way through that. However, it's kind of a wash, because the Canadians will give you a lower valuation, but they'll invest in common shares. They'll require no preferences. They won't have retraction rights, also known as redemption rights, and they won't have cumulative dividends. So, it's 6 of one, half a dozen of the other.
Okay, I guess at this point, I didn't see a lot of questions. Yes, Joe.
A lot of the companies we see, often will be based upon technology that is licensed, transferred out of universities.
Okay, Joe is from Pittsburgh, by the way.
Yeah, Blue Tree Capital, sorry. And of course, we always have to look at those transfer documents to see, how is it in Canada?
We have similar, it's very variable university to university. Some of the universities, it's very easy to get IP out of them. What I always tell investors, because I work with a lot of venture capital companies doing due diligence for them on both sides of the border. And what I always recommend is make sure that intellectual property has been assigned to the company, ideally not licensed, but actually assigned.
Is typically the universities looking for, what are they looking to get out of there? Is there licensing, royalties?
Yeah, again, very variable, but some of the universities that are relatively new to licensing out intellectual property will let you give them a very small equity stake, dilutable, and then ultimately you'll own the IP outright once you achieve a certain funding milestone. Because the university's mandate in Canada is not supposed to be to make money off of commercial success. It's just supposed to be about fostering innovation and education. Some of them, though, particularly the big ones like the University of Toronto, will want a lifetime royalty or a non-dilutable equity stake, but they're generally not particularly onerous terms. But the key is to get a good entrepreneur who has a lot of experience in negotiating with the universities, or to bring in an advisor who does, because if you're willing to really play hardball, you can always get the universities down to something very palatable for investors.
Okay, while Nick's waiting for the microphone, I'm just going to ask a quick valuation question. We're hearing about, high valuations, high pre-money valuations at startup stage in some situations. So everybody who's maybe a potential angel investor out there thinks, well, if it's a $10 million valuation, how's my $25,000 going to make a difference? But are you seeing lower valuations now that we went through this recession? I'll ask Henry, because
I don't think so. I think there's more syndication as well. So people are willing to look at a higher valuation because there's more money coming in. And it's really the technology. Is there a value inflection coming with this round of financing? And where's the exit? Okay. Is there a likely exit? So it's a balance.
Yeah. Okay, Nick, I saw you're got the microphone now.
Part of this actually is defense to some of the things that were said. First of all, a lot of the questions surrounded on the cross-border surrounded around U.S. investors investing in Canadian companies. I should also say that, notwithstanding some of the things that Lisa said about Canadian investors, that there's a big cultural change happening. And in fact, there's a lot of Canadian investors who are very interested in investing in U.S. companies. And in fact, That's been happening for a long time. It's just been quiet. But, Canadians, the other tradable Canadians is we have much more international outlook, if you will, because Canadian marketplace is much smaller. So to you entrepreneurs, as I said, notwithstanding Lisa's comments, Canadian investors are very receptive to hearing your story. And in fact, part of the sea change in attitude is probably exemplified by the folks from G10 who are here today, which is the Angel Investment Group out of Waterloo, who is very, very progressive and is akin to how the folks in Boston behave.
Nick, you're not up here on the panel, but you qualify as an international investor. You personally have made investments in U.S. companies through the Buffalo Angel Group, right? And therefore, you have not had any problem at all in making American investments. Is that correct?
Not at all. I have investments, as you know, through the Buffalo Angel Group. I also have other investments independent of an angel organization. Plus, I've actually run a company based out of Toronto, out of Canada, who had divisions here in the U.S. And my philosophy is the border, despite a couple of nuisance factors, really doesn't exist. Culturally, operationally, we're almost identical.
Thanks, Nick. I appreciate that. Any other questions? Yes, down here in the front, Mr. Kent Keating has a question.
Yeah, I can just yell, I think. I was told, you can argue this, but I was told you're best to invest in Canada through a corporation rather than individual. Maybe Henry could talk or Tom to that point, and it was just a better way to do that generally. They should be an LLC or a corporation. Your investment.
That's just never crossed my mind, nor have I heard of it. I mean, and except we talked a little this morning whether angel groups are creating an LLC just to invest as a group, to allow smaller investors within their group. So there would be an LLC, but I really don't know of anyone who's...
Tom, I think you and I talked a little bit about that. Would you take that question?
Well, first a disclaimer, my focus in practice goes the other direction. Canada to the U.S., and I'm a U.S. lawyer and not a Canadian lawyer. Still, we see some things, and I have heard that it is a little bit better to invest through a corporation rather than individually, but I don't know the specific reason for that. LLCs, I do know specifically, were problematic as vehicles for U.S. investors making investments into Canada up until 2008. When the fifth protocol to the tax treaty was adopted and extended to the owners of U.S. LLCs the treaty benefits. Up until that point, it all goes back, there's a Revenue Canada interpretation that treats and taxes LLCs as corporations, and because so many LLCs in the States are not taxed as corporations, rather they're disregarded entities or flow-through entities taxed like partnerships, in the treaty parlance, they weren't taxpayers. So Revenue Canada took the position early on that because they weren't taxpayers, they weren't entitled to the treaty benefits, which meant that if you were investing through a U.S. LLC, and a lot of investment groups are structured stateside as LLCs, if you were investing into Canada, you wouldn't get the treaty benefits of the lowered withholding rates on things such as dividend payments up until just last year. There was withholding on interest. That's now been phased out, and thankfully so. Makes the way a little bit easier, but that's a bit of a long-winded answer.
Well, actually, it's a very helpful answer. I just want to follow up on one of the points there. I mean, all of us that are trying to, figure out where we play, we have to make a decision. Do we want to start an LLC every time we make an investment? And I think the older angel groups in the country have come to a best practice on that, or at least an established practice for their group. And Henry, you at Boston Harbor represent one of the older angel groups. So what's the experience there? Do you form an LLC every time you make an investment?
No. Everyone invests as individuals, which as the same with Launchpad, which is also actively looking at quantum dental. It's investing as individuals and kind of trying to herd cats to get agreement on anything. And eventually you just basically say, here's the term sheet, yes or no.
Okay. That's very helpful. That helps guide us. Yes, Marnie has a question or a comment.
Actually, a question and a comment. As we have had the Angel Capital Education Foundation folks here, and actually a program that ran in Albany a few weeks ago, they were talking a lot about regional differences in angels on the West Coast in terms that they're asking for versus the East Coast, and we're talking about cross-border differences. So Lisa, to your point that Canadian angels, I believe you said, were willing to take common shares, I'm just wondering, what do we expect in trends over the next few years? If the syndication movement really takes off, I would have to guess that angels will start converging towards a more common type of term sheet, et cetera. Where do you see this all going, and what can the angels in this room expect?
Lisa, why don't you take that, because you seem to have a little feel for the...
I mean, I think you have to keep in mind that a lot of what you're seeing in term sheets these days, the pref shares, the dividends, retraction, redemption rights, came from a lot of people getting burned, particularly in biotech when the bubble burst in 2001. So there were different term sheets that you could get from angels prior to that point. But now investors are more risk averse, once bitten, once burned, twice shy, once bitten, twice, whatever that expression is. So, there's been an evolution in term sheets, and it's not even necessarily specifically geography-based, but angel term sheets have started to mirror venture capital term sheets more closely. So the terms that you see in U.S. angel term sheets are very similar to what you would see in a standard venture capital term sheet. Canada's not there yet, but I do think, and not just in this, as in everything, there's going to be more standardization internationally in everything as we become more and more of a global economy. So I do think eventually the Canadian investors will probably move to standardize in a similar fashion to the way that the U.S. groups have. Certainly with the Angel Capital Association, the National Angel Association down here, there's a lot more standardization between groups who are active members of that overall umbrella organization in terms of terms, due diligence processes. There's still a lot more variability than you would see in venture capital investing, a lot more. But I am seeing more and more standardization. There are groups, the group in Savannah has a very similar due diligence process to Golden Seeds up in Boston and New York. Some of the other angel groups have a more relaxed, casual approach to due diligence, but I've definitely seen more and more standardization, and it does seem to be moving towards more rigor, more process-oriented due diligence, more protective, investor-friendly term sheets, which is not necessarily a bad thing for companies, but it's something that you need to be aware of, and that's where your valuation needs to come in.
Any other comments from the panel? Okay. You have another comment or question? Okay. I see a question in the back.
Yeah, I have a question. The individual angel investor has indicated is making relatively small investments each. When they get aggregated, for example, in Boston Harbor or in Buffalo, what's the total likely to be, or what's the rate?
Yeah, that again. Yeah, it depends a lot on the size of the angel group. So out of Launchpad, we have the potential to get close to $1 million in the aggregate. Out of Boston Harbor,
Probably about 250.
Yeah, Boston Harbor is probably about 250. There's a group in Connecticut that probably, if they come in, it'll be 100. So you definitely spend a lot of time on the road raising a relatively small amount of money. I mean, my last company raised just under $30 million from 3 investors. Relatively simple road show there. Even with the other investors we got term sheets from and turned down. With the angels, you're visiting with quite a few groups and then fielding a lot of questions from every individual in that group, even if they pool the questions. So there's certain amount of effort there that's very different from venture capital raising.
And I think the question, Shep, was what about Buffalo? We find that we consistently can raise between $100,000 and $300,000. We've raised more than that for certain deals when it's a deal that we can close the deal and everybody wants to be in. We dig deep or get more investors involved. But most of the time, what we're trying to do today, frankly, is to find the other angel groups that we can syndicate with, because I heard, between Henry and Lisa, it was real quickly we got up to almost $2 million in investments by a syndication, and that's why one angel group that has contacts in other cities can raise a $2 million round. And I'll tell you, I think you'd be happier to have angels than VCs. And how about if I ask the panel that question? Lisa, you want to start? Do you like angel investors better than VC investors?
Oh, yeah. I mean, I think all of us who've raised venture capital money still have the scorch marks from the experience. So, that is a very challenging relationship to manage. With the angels, you can get a lot of really diverse operational experience, a lot of value add to the company, and they have much more of a sense of what it's like to be in your shoes, to be running a company, whereas a lot of the venture capitalists are career, VCs or investment bankers and just don't have that same understanding of what it takes to build a company.
Sanjay, I'm sorry.
I think the other thing is with angels, you usually get smarter money because they have had some operational experience. One of the VCs that I know very well said to a young entrepreneur, I just want to let you know that yes, we'll invest in your company. I will own 95% by the time we're done, and you won't be working here. So just to set the stage for their discussions.
Sanjay, have you been run over by the truck called venture capital?
No, but I've heard the stories. So the one thing I'd say, the angels that we had on investing with Simply Audiobooks, compared to what I'd heard about VCs, and so you can correct me if I'm wrong, we found some interesting comments from them in terms of operating, but not the ability to link us to partner companies the way we would have hoped to, and the way we would hope to if we had VCs in place. So like our board people couldn't talk to the board people at companies in the US that we would partner with.
Although with Smart Cells, your board had...
Our board had the ability, we had one investment banker, one pharmaceutical entrepreneur, and myself. And we had contacts with every diabetes company in the United States. Someone knew someone. If it wasn't firsthand, it was secondhand.
So the lesson here is what you lack in terms of investor contacts and penetration in your marketplace, you can make up with a board of directors.
Mm-hmm. Right.
And a question that I was asked last night at dinner is, when you bring in outside investor or outside independent board members, people who are strangers to the company, but you know they're out there, you want to approach them, somebody gets the courage up to call them and say, I've got a startup in, let's say, Buffalo, New York, and we need somebody with your world-class knowledge of the technical field. Would you come and serve on our board? What kind of offer do you make to the person to entice them to come? Do you make them an equity offer, a financial offer? And if it's an equity offer, how much?
Yeah, I mean, what we offered, now mind you, that was a VC-backed company, but our chairman of the board, who I recruited out of Boston, because he had a lot of experience successfully building startups. He ran E-Ink, the company that makes e-paper and the Kindle. So he got $20,000 a year for being chairman of the board and had a 1% equity stake.
And is 1% the standard? That's what I hear.
That's
for the chair, it's different for directors. You should never give the rest of your board the same as the chair.
Because I'm on a on the board of a California company, and there was no salary, but it was 0.75%.
Okay, great.
Of equity.
Sanjay, anything?
No, I mean, the one time we recruited an external director, it was just the compensation, and I think it was about $20,000 a year as well.
Yeah, and I mean, I've sat as a board director, not chair, but board director on a number of boards, and it's usually, kind of my consulting rate per hour for travel and participation in the board meeting, or equity, and typically it's the compensation. A lot of companies are kind of starved for equity to give away.
Okay. I see a hand up in the back. Joe, did you have a question?
Yeah, I really shout because there's tons of questions that come out of this discussion. But recently, in the last 5 minutes, the difference between compensating a director or an advisor in Canada as opposed to the United States. Because the fact is that, at least in my experience, the American directors look for compensation in some obvious way. The Canadian director is less likely to look for that. And so when you say, well, we give this percent or that percent to the director or advisor, is that something that's different when you look at different markets?
I think it is different when you look at different markets. It's different at the different stages of companies. I think if you, as a Canadian company, want to attract a U.S. board director, then you need to be prepared to pay. I mean, I probably could have gotten a Canadian board chair for a lot less than I paid the U.S. board chair. But, I think one thing you have to really keep in mind, when you raise venture capital, they will insist you structure your board a certain way to bring in the relevant expertise, and they will back you on, doing the recruiting and paying those resources. There's a temptation as a company who's raising angel money to be a little bit lazy on the board side, maybe have more founder seats and, fewer independent directors. That's a great way to never realize shareholder value. So, you have to resist the temptation to be lazy and easy on yourself as the CEO by having, some friendly, friends and family or whatever on the board, and really make sure that your board is constituted properly and has external people with relevant expertise who will hold you accountable and provide, valuable insight.
And when you think about your board, do you think about exit? Because again, in the States, exits are different than in Canada. I mean, you have the, DSE, you have the small cap exchange in Toronto. You have a lot of ways to look at getting out of a company if you're an investor that you don't have in the U.S. So how does that play into, when you start to do documentation and those sorts of things?
Yeah. I mean, a lot of Canadian companies do exit in the States. The road shows that we'll do are down in the States. We'll list on the New York Exchange. I mean, there used to be a lot of biotech exits very early on through IPO on the Toronto Exchange. But now, I mean, if you're looking for a significant exit and you're going to go to the public markets, you go to the States. And acquisition, you're almost certainly going to the States because we don't have a lot of receptors for acquired companies.
That's great, Lisa. Thank you very much. We're running out of time now, and so I want to ask if there's one more question to wrap up this event, and then if anybody has any questions, hopefully some of the panelists will be staying on after, and you can approach the panelists one-on-one. Any other last questions? Well, I want to tell you, I found that this has been very enlightening. The four panelists that are up here are truly international investors, and they have perspectives that we would not be able to access if they weren't willing to serve as panelists. I want to ask all of us to show our appreciation for the information they shared with us and thank them for coming today.